Howdy folks, James here. Welcome to the live stream. I'm in difficult circumstances here. First thing I'd like you to do, if you're present, is let me know that you can hear me and see me. That's a good start. I'm in a cafe in Witsand. So please type up something in the comments section if you can hear me. And in the meantime, I'll also check on my phone just to make sure it's coming through okay. Testing sound, testing everything. Wonderful, thank you, Robert. Appreciate it, mate. We start in about 4 minutes. Thank you, Carlos. Thank you, fantastic, wonderful. I'm sitting in a pizza place, restaurant in Witsand, that's spelled W-I-T-S-A-N-D, in South Africa. And it's the Bitcoin capital of South Africa, so I've come to go and check out what it's all about here. So far, quite disappointing, actually, but that's a story for another time. Good day, Robson. Good day, everyone. I think you should be able to see the chats on the screen as well, which is a new development here on StreamYard. So we're not going to start for 4 minutes or 5 minutes or so. I'll wait for everyone to come in. But welcome to everyone. And I think we can also get these up on the screen. Yeah. Good day, Robert. And Glovers. Hello, Carlos. Nice to have you here. John. Thank you, John. Glad you're hearing me and receiving me well. Good day, Robson. Loud and clear. Fantastic. Awesome stuff. Andreas Graf. Quadruple One. And Samsung S. And Augusto Ramos. Good day to you too. So I'm pleased to have you all here, and hopefully this will go up without a hitch. There is a problem with the internet that it goes in and out on occasion. So if that does happen, please just stay around, don't leave. I'm going to repeat that instruction just before we start. So it does seem to drop off for about a minute and then come back again if that happens. So just stick around and stay around. It'll eventually come back on live, I suppose, if all going well. Good day, Ivan. Wonderful to see you, mate. From Portugal, big hug to you as well, Augusto. It's a place I've considered moving to, actually. I'm a keen surfer, and as you'll know, Nazaré and Porto have some excellent surf. Nazaré is the biggest surf in the world, and it's quite a spectacle. I was thinking of moving to Portugal, but it's just a good country as well. Very similar to many ways to South Africa. Apparently, in some of the hinterland and some of the inland areas are quite similar. So that sort of European but dryish climate. So great to have you here, Augusto. All right, folks. So I'm going to get rid of these comments on the page. Actually, that's not very pretty. Good day, Amir. It's wonderful to have you here too, and most welcome. Right, where should we start? Should we start with energies, or should we carry on? Should we start at the beginning? I think most people will be interested in what's going on with natural gas. It's also a very big cow farming area around here. So every time I do this, it's because there's a cow fly that's approached the screen. We'll talk about natural gas. We'll start off with natural gas and oil, talk a bit about uranium, and then we'll go into some of the things that are moving, like Bitcoin, silver and gold, and the stocks. Are we going to top out here today or this week? It's now Wednesday, hump day, and this is the hump of the week. Are we on the downside of the hump now, sliding down the other side, or are we still at the top of the hump, or still going up? We'll find out soon enough. Just one more minute, folks, and then we'll start. If you've got any questions, please post them up. Good day, Amit. Lovely to have you, mate, as always. There are forests, actually, Ivan, but not a lot. Not like, Russia and America and Canada, in parts of Europe. Nothing like that. Germany. Morning, VB. Great to have you, mate. All right, let's get going, folks. And I'm going to start, I think, with natural gas. As I said, before I start, with the technical stuff, if I drop out and disappear, please just hang on. The internet will come back. It comes on. Occasionally, it goes off for about a minute. So if you don't see me for a minute, come back or just stay around. And secondly, if you've got any questions, please ask them. I keep on looking at my phone camera, but I'm using the camera on the screen just for internet stability. That's why my face is so big and ugly in your screen. Just in case there's some sort of connectivity drop out here. So if you have any questions, please post them up and I'll get to those as soon as I've finished my monologue, which I'm going to start right now. So we're going to go across first of all to energies, and we'll look at natural gas. Now, we're moving down after a spike up this morning. If you have been following me on X and on YouTube, you'll know that we got long right at the bottom there at just exactly 3.1. We got long in there, and for some reason, my hedge arrow has disappeared. Don't know what happened. Oh, we're not trading on the futures. We're trading on the spot. Let me go to the spot. The futures roll over on my broker this week, so I'm not going to be trading the futures contracts until the rollover is complete. But in the meantime, I'm trading the natural gas spot, continuous price rather, over here at Pepperstone. I normally trade the futures at Black Bull Markets. The week approaching the rollover, I often get out of the market and switch across to the spot, the continuous. There's no rollover. There are overnight carry costs, so I don't like to use this too much. But in the last week or so, before the roll completes, I don't mind entering into the continuous market. Now, we got long here at 3.1. This was well publicized, and we got hedged at the yellow arrow here, or orange arrow. And I think that was at 3.77. Maybe it was 3.4. Can't remember precisely. I'd have to go back to have a look at my trade positions, but very, very close to 3.4. So we have about a 30 cent profit on that trade. We also took profits on all of those shorts that we had layered along the top there, and that was on the futures, not on the continuous. Let me show you on the futures chart where we've been trading up until now, and I'm going to drink my Coke in the meantime as well. These are the futures positions that we had on, and we took them off at the bottom here. So pretty simple trade. We got short there. A number of tranches. These last 4 tranches were still live, still active. And we hedged a little bit there after the gap down, expecting a gap fill immediately. It didn't happen. Moved down first and then filled the gap, and we moved on much, much higher. This is a 4-hour chart on the continuous, on the futures. We're not trading the futures right now. I'm trading the continuous, but with the very same idea in mind. Now, we got long right down there on the continuous at 3.1, and we got hedged right here close to 3.4, locking in, I think it was a 27 pip profit, 27 cent profit. Thinking of currencies already, we're going to go across shortly to the currency chart. So we've got all these moving averages above us. There's the 200, the 100, and the 50, all stacked above us, and this big order block that we spiked up into. This spike up will no doubt have taken out a lot of the short positions, the short traders, and cleared the way for a move down. I like the spike high, and in 1600, in 1.5 hours, this 4-hour candle will complete, and I will decide at that point whether to exit the hedge and go short for a move back down to the $3 level. And we stopped at just above $3, but we could get a little lower. Looking at this chart from a slightly expanded view, you can see there's the $3 order block level and the area that I thought we could get into. I posted on and commented on X that I was a little lucky to get into this trade. We traded off this red support line, which was previous resistance, in the center of this sort of low liquidity zone, this sort of gap between here with this big white candle. And the bottom of that, or the center of that liquidity gap, if you want to call it that, is also the top of this previous resistance and a double top. The double top there is important. That means it's a pretty important support level. We got to precisely that level and bounced. Remember, I was allowing for a move down into the order block down to $3, maybe slightly below. Now, on the next attempt, which seems to be happening and occurring right now, we failed the order block, and we're busy, as we're talking, failing these moving averages. So on the next attempt, we should get down through where we bounced last time, down to the order block and where we expected to bounce on the first occasion. So my target remains $3 or just below, and potentially even to the bottom of the order block, That's around about 2.88 or 2.89. So this move here, if we do get short, in the coming hour and a half at the 4-hour rollover will take me into a position where I'm aiming now for the bottom of this order block and not the red line any further. That's where we bounced the last time. So I'm looking for a lower high and a lower low to proceed hereafter. This candle's looking pretty good right now. It's moving down. As I said, we rejected the order block, and we're busy trying to reject these moving averages. There's still an hour and a half to go before the rollover, which means we can't make any decisions about whether this is going to go long or short right now. We need to wait for the candle to complete, to close, to look at the candle shape, to look at how we close, to look at whether we've got, as it is currently looking, a spike high doji candle, or this has the opportunity in the next hour and a half to refill back into some of the zone. If we do get short, I'll be looking for a retracement. This candle, for example, I'll just give you a little trading tip here. If you want to get short on this, I'm not saying you should or you shouldn't, but I might well do, depending on how we close. But if we do get short and the candle closes something similar to this, or even a little bit lower, it's not a good idea to actually short immediately. We've got 3 beautiful moving averages just above us that we could rally back into. Those will form resistance on the breakdown, pull back, revisit, say goodbye, kiss goodbye, the moving averages, and then proceed down. So even if we end this 4-hour candle down at something like 3.32 on the continuous here, and you'll have to translate this to where you are on your futures if you're still in the futures contracts. Some futures brokers only roll over next week. Mine rolls over this week. But if we do close near the bottom of this area at about 3.3132, wait for a retracement back up to at least the 200-period moving average before selling. So if we close down there, let me just quickly draw that in for you. Where's my path? So if we closed over here somewhere at the end of this candle, look for something like that first, up to the 200-period moving average, back up to 3.37, and then down towards our target. Now, target is now lower than the previous low, that's over there, lower than the top of the green block, but down into the bottom of this order block. That'll take a bit of time. That won't be as steep as that, although the rally up was pretty steep. But we'll follow this sort of general 45-degree angle that most trends follow. And so let's go parallel to this slope down, something like that, roughly like that, down to the bottom of this order block. Let's go a little lower. And that would take us to Thursday, the 29th of May. That's next week, Thursday. So it may take an entire week to get down here until the futures roll over, and then we'll decide what happens after that. So we've got about a week or so for us to get down here to about 2.9, maybe slightly lower, 2.88, 2.87, something like that. But wait, if you are going to go short, and if you can, sit in your hands for a second and wait for a retracement back to this 200-period moving average. That's this purple line, or even the 20 and the 20 and the 100 confluence over here at about 3.4. And even better, really, if it did occur, which I don't think it will, we could get a retracement back up to 3.5, $3.50. But I think most likely, given the shape of this candle, the way it's moving down, we should continue this move down. If we close something like this, down below the previous low, down below the red line, down below the top of this order block, down to the bottom of the order block, following roughly a 45-degree angle, which will take us into next week, Thursday, which is when the rollover is. And that would all be perfect timing and a pretty good result if it works out like that. Now, most of the time, trades and trade ideas and strategies don't work out, as you all know yourself. And it's never as neat as you expect it might be or should be. And so you end up sort of scrambling a little bit and maybe having to do a bit of hedging, a bit of addition, subtraction to your positions, whatever it might be. But that's the general idea. And very often these moves take place not in precisely the way that we want them to, but something along the lines of that, sometimes making a slightly different pattern or path or route to get there, but eventually ending up in the same place at roughly the same time. I'll show you some examples of that on some other instruments shortly. Now, whilst we're on this page, we've also got WTI. I'm not going to talk about URA. We're long on UEC and URA. There's not much to talk about there. I don't want to waste time in this session, just in case we run out of internet. So I'm going to go through the things that are important today and leave the less important things. So this is WTI, and we have no positions on here just yet. We broke up through there. If you know, if you've been watching my stuff, you'll know that I'm aiming for a move up into Moab, mother of all breaks. That's a huge, very long-term breakdown level, putting us into what I now think is a new range for WTI oil. between $50 and $70. We got down to almost 50. We got to 54 in a bit. So there's some space for us to go further down. And the top of the range, $70. This is my proposal. I'm not saying it's right or wrong, but I think I'm more or less accurate. The top of the range should be around $70. That's above Moab, and I wouldn't be surprised. That's also where the 200-period moving average is, roughly. So I wouldn't be surprised if we just cleaned out some of the new eager fresh shorts that are waiting for the breakdown pullback to get short, and then just clean them out through the top there, a little bit of probing through the 200 maybe, and even a move back up to the top of the channel, which we've done every single time so far. This is the long-term channel going back to 2023. And every time we've reached the top of the channel again. And are we going to do that on this occasion? We got to the bottom, we pressed through the bottom, weakening the argument for a move back up to the top. So we've broken the bottom. And also we've got this massive Moab level above us, which is preventing us from moving higher, or it'll at least try to prevent us from moving higher. We've also got the 200 and the 100-period moving averages, and we've run into already the 50-period moving average right here. Now, people are asking me, are we turning here? Should we be going short at this point and looking for this to move down? Possibly. I don't know. But my suspicion is that this is just too easy. You know, double top over here at around about $65, $64, and then a move down. Not much testing, no probing into Moab, no testing of the longer-term moving averages, the 100 and the 200, and just an easy, gentle move down following the red path. I don't think it's as simple as that. It never is. And the market's always designed, or in its amorphous collective mind, trying to punish the little guys. That's you and me. And the little guys get punished when they set a stop loss, they set an entry, and they set a target, and they stick to that no matter what, without very much flexibility. So if your stop loss is above Moab here at, let's say, $68.50, and we get up to $69.50, you will have been stopped out and potentially lost out on the trade. And that's why, and the retail market makes up a large portion of the natural gas trading market as well. A lot of wind going on here, noises and banging. So the market will always try and trick and weed out, smoke out the weaker hands, weaker traders, smaller accounts, retail traders, people who can't afford to lose the trades, people with emotional attachment to trades, people who are inexperienced, people who don't use stop losses, who add to losing trades. Go and check out my tweet on X. We discussed this. I'll get back to that topic a bit later. But the biggest reason that people lose money is all of the things I just mentioned. And the market knows that, and it'll try and take advantage of that and manipulate you into getting stopped out, missing out on the trade, but taking the loss. So be very, very careful of those sorts of events. Don't be surprised if we have to get slightly higher and that we don't move down directly from here. But having said that, we have got to the 50-period moving average. We are forming a reversal candle. This is a day chart. I'm going to go to the 4-hour chart quickly and have a look and show you how that looks. And it doesn't look all that bearish, actually. Forget this red line. It's not a trend line. It's just my path that I've drawn in there. So ignore that if you can. Yeah, I was going to delete it, but I'm not going to. But you can see we spiked up to the order block there at the top of this range. That's where, the top of that range. Just touching the order block, just probing it ever so gently. But bouncing off the 20, look where we are. Look where the moving averages are, 20, 50, 200, 100, all below us. And we're bouncing off there right now. I don't trust this move down just yet to be on its way. And I think going back to the day chart, we could see a little bit higher. All right, I hope I haven't lost internet. I don't think so. All right, so that's the way the day chart looks. And I think we need to move higher up towards Moab and even slightly higher than that. Probe through there, stop some of the retail traders out, maybe even to the top of the channel. That would take us up to, at the most, I would say, like 73, 74, 75 at the most. But I think we'll probably try and turn around under or at about Moab or the 200-period moving average. So that's that. I'm just going to go back to my streaming screen. Can you folks all still hear me? Is it coming through clearly? Is the sound okay? Is the picture okay? Everything like that. Just let me know if you can hear me. and I'll get to your questions. Please don't stop typing them up. I will answer your questions when we get there towards the end of this. Now, I don't want to spend a lot of time more on this page talking about uranium. It's a pretty boring trade, and it's a zigzaggy upward directioned trade. We have good profits on these trades already. We got long on URA down here at 22.80, and we're trading at 28 something now, 28.20. So a really big profit on that one. And then UEC, we got long at $4.74. We're trading at $5.19. Also in good profit, but having retraced a little bit overnight, or over the last few days rather. These are both day charts. Now let's go and have a look at currencies. My view on the euro is still that we'll get to 1.2 at 1.18 at the least. We're currently trading at 1.1320, and we have two long positions, one from over there and one from slightly lower. One's in profit and one approaching break even. In fact, we did touch it at break even. So my target for the euro, and I'm going to show you very quickly, and I'm just going to do this once, and I do it every couple of videos so that we don't spend too much time on it. The reason I'm aiming much further up is because of, when we saw it on the dollar index as well, this big sweep through support. There's support there where my red arrow is. So big sweep through that support level. The support was at 1.0450. We got as low as 1.0176. Massive sweep down through there, but then a prompt rally, massive weeks, rallies, candles all the way up back to here. And I think we've got to get to the top Bollinger Band and the 78.6% Fibonacci at least. And that's at around about 1.18. That's the top of the yellow block. We could get even higher. There's 1.2, the big round number, and there's 1.23, and the top of this last recent rally range. So I'm aiming, I say I've got a big question mark up in there. Let's make it bigger. I'm aiming for somewhere up into these areas for the euro, and that'll give us about 5 or 6, maybe even 700 pips on this trade. So we're just going to hold that and see how we go. As long as we keep moving in the right direction, we'll be okay. It's a pleasure, Martin. If you can hear me, just put up a yes. If it's tolerable, if you can follow what's going on, just type Y up in the chat box for me, please. Just in case it's not easy to follow. Yachi said it's VB says it's cutting in and out. Yes, all good. Okay, great. Let's carry on. Let's not waste time. All good. Maybe it's your internet over there, VB. I'm not sure. It's probably mine, though. Probably not you. All right. So that's the euro. And the only other trade we have is a short euro yen. I was looking to get short on the dollar yen. We've talked about this a couple of times. And we wanted to get short at the trend line or up into these moving averages and the 618 Fibonacci level. We got to the trend line. We didn't take a short because we blasted right up through it. And I was then expecting at least to get to the 50% retracement level at 149 or even back up here to 151. As it happens, there was a fake break through that trend line, and we've now rolled over and moved down. We don't have that trade on. We missed out on that one. But we do have a short euro yen trade, and that's looking okay, moving down. And as the dollar yen starts moving down further, you can see how it drags the euro yen down. We've got a trend line now, at least, of sorts. We haven't had a trend line on this for a very, very long time. So I've drawn in this rough trend line, and a breakdown below there should accelerate this. There's the 200-period moving average just below as well. So a breakdown below there should see us moving down all the way down to about 144 over time. That's down here. And all that is a measured move from this bear flag. So that's euro yen. So we have two trade positions on currencies, only two. That's long the euro, but short the euro against the Japanese yen, long the euro against the dollar. We're also looking at getting into a long Australian dollar trade. And I kind of like this one very much, but I think we're a little premature. I put this up on X yesterday as well, and I did something like this, just showing that we could or might sort of move along here. We want the market to be as symmetrical as possible. We want our charts to be symmetrical. They're often symmetrical, and you can see this sort of squiggly bracket shape that's forming. I'll try and just quickly roughly draw it with a brush. And this is not going to work so well. You know, like a squiggly bracket. If you remember drawing these at school, that sort of thing. Okay, that was terrible. Let's ignore that. Can't do it. But anyway, we want this leg. So we got the flat thing there, the clean out. We're going flat again, sideways across the page, under the 200 period moving average, but above the 50 and above the 100, and forming a bullish accelerative pattern. But it's a little tempting to get in right now, but we do want to see some more symmetry. If we take that sort of length, and I'm going to do a little trick here. There's a thing on, if you've got TradingView Pro, I think you only get it on Pro. You can get TradingView Pro, by the way, if you use Black Bull Markets, my broker. There's a link below where you can sign up with Black Bull, and they give you free TradingView Pro charts. And it's the broker I also use myself. And so it'd be helpful for you to be able to follow my prices exactly if you're trading in my private trading group or if you're following me here on YouTube. But what I'm going to use is this sort of tool called the bars pattern, just to kind of estimate the length of this section here, like that. And then I'm just going to drag this across and start it over there. And that would be symmetrical if we got something like that. And it's quite possible, you can see how that sort of is pleasing to the eye. And very often, it just seems weird, but something that's pleasing to the eye is often pleasing to the market too. So this is the kind of thing I'm looking at. And that would take us all the way to July. But I think that seems a little impossible. So perhaps there is a chance that we'll just break up through here and keep on moving up. So what I've advised my traders and myself, which is what I'm going to do as well, is a close above these highs somewhere up here, I suppose. And I'm sort of aiming for 0.65, a close above 0.65, or to get long. And I do believe it's a long trade, a bullish pattern. There are reasons why I think that the dollar is going to weaken, which I've talked about in relationship to the euro. And so there's no reason why the Aussie also shouldn't pick up some strength. We had a beautiful spike low clear out. If we go to the weekly chart, you can see how nice this looks. Let me quickly show you on the weekly chart. Massive bullish engulfing candle, which also turns out to be a piercing pattern candle, a very important reversal candle pattern. And we've held that gain so far. So I do want to get long on the Aussie. My target will be much, much higher. We've got a trend line to break. This is a weekly chart, bear in mind. Don't get freaked out by that. A beautiful, neat, clean trend line coinciding with the 200 period moving average on the weekly chart. So we've got that to aim for, which should be quite easy. It's a price magnet. Obviously, it's the 200 and the trend line. So it's a confluence of different things. Fantastic. I'm glad you can hear me. So that's a definite target. And that's at 0.6724. If we get long at 0.65, that'll give us 200 pips, more than 200 pips. But I think we could do better than that. I think we could get back up into this order block up here at about 0.7 something. Maybe not quite as high as that. That's a very high price for the Aussie against the US dollar. But maybe up into about 0.7, 0.71 to the middle of this range. And if I draw a horizontal line across here, you'll see that there is a general, probably a rectangle would be better to draw here, a zone rather than a line. But I'm just going to draw this line here, and I'm going to change that to green, and that could be a potential target. All right, so, and that could take us above 0.67 up to around about 0.6980, maybe 0.7, somewhere up into this region. And really, with a bit of luck and a big spurt, we could get slightly higher. So that's the Aussie. We don't have a trade on that just yet. I'm looking to get into a trade if and when we get a symmetrical outcome here, or if we perform a breakout and close above 0.65. If we get some dips down to the 100 period moving average or the 50, or down to this level slightly below us, let me just clone this. If we get a dip down to somewhere into this zone, we might even have a go anyway, because it's the bottom of the range, ignoring the spike down. So either the bottom of the range to buy or a close above 0.65, target potentially 0.67, 0.7, sorry. So that's the Aussie dollar, and that's all the currency trades that we have in mind at the moment. And then going across to the S&P, well, there's not much to say here either, really. Either we're topping or we're not. We're in these zones where I believe, and where I believe that, you know, I think we're in a bear market, and this is a classic bear market. We've had a massive move up, a huge correction down On the NASDAQ, about 22 or 23%. And then a massive bull market, a bear market rally, or a dead cat bounce. Sometimes dead cat bounces don't look very dead at all. They look very alive. This one's very alive for sure, which means it could carry on moving higher. And we've got a Zweig breadth thrust and all sorts of things going on, and all sorts of records being broken by this recovery, making people think that we are heading higher. They may well be right, but my feeling is that this is a really a textbook bear market pullback, a bear market move. We've rallied up to the 78.6% Fibonacci retracement. We've moved slightly above it, so cleared out all the shorts that we're looking to go short there, and we've bounced off the top of it, which is kind of bullish, big bullish candle a few days ago, but now dribbling down again. A few reversal candles here, and remember, in a bear market, the dead cat bounces and the bear market rallies are often more violent, more aggressive, more dramatic than the move down in the first place. So we had this move down, which actually in this event turned out to be very dramatic, and then the move up, which is maybe even more dramatic than the move down. So these bear market rallies, dead cat bounces, which look like very much alive, can be very violent, and often they get to around about the 78.6% Fibonacci, or a double top, or slightly above that previous high, and then the bear market resumes after having sort of established that this is a bear market. So that's until proven otherwise, until we close convincingly above the all-time high, and some, I'll continue to think that we're in a bear market. At the moment, we're moving down a little bit. We've got some reversal candles here on the NASDAQ, a whole cluster of them actually. We're short from the red arrow. And on the S&P, we have a cluster of reversal candles as well. Very, 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 very similar picture. There's the 78.6%. There's the move down, not quite as dramatic as the NASDAQ, several percentage points less, but equally as dramatic on the rally back up through the 786, through my blob, which I had drawn there a couple of months ago as my selling target, and I did sell in that area actually, but we added some more shorts on close to the top, and we've got 3 tranches at average price on this candle just down here. So that's why this red arrow is here. It's not where we took the trade. We started off in the blob. So, but that our average price is sort of right up at the top here. So that's the way it is at the moment. And also a cluster of reversal candles, one up, one down, maybe there, little one up, one down. A tweezer top, very difficult to see because of these tiny candles, maybe a little tweezer top there, and then today moving down. That's an important candle, although they're small. A tweezer top is one of the best reversal patterns you can find, and there's an obvious one there, even though those candles are tiny. And you'll see the same on the NASDAQ, although we didn't get the tweezer top. And maybe we did. Let's have a quick look. I'm not 100% sure. That's the S&P. We're also short on the NASDAQ from slightly lower down compared to where we are right now, although I think we might be just about moving into break even right now. So let's have a look at these candles. The last 2 days, this is today. Also, not quite, a little bit of a profile there, but also basically a tweezer top. 2 small-bodied candles with equal highs, almost, a couple of cents, dollars apart, and that's kind of thing. And then 2 star dojis before that as well. All these are reversal candles on the NASDAQ. Same thing on the S&P. Did we get some star dojis there? Not really, but a couple there, yeah, maybe. Not really, no, not quite the same on the S&P. So that's where we are, folks. We're short on both of those indices. We're also short on the German 30, and we reached, not quite, and we could go a little higher, actually. We've got this very long-term channel on the German 30, excuse me, here on my broker at Black Bull. And this channel goes back, I think it's like 3-4 years, yeah, to about 2022. So yeah, almost 3 years. So this channel's really long, and it's been respected on every occasion. And we've now reached the top of the channel. The last time we did there, we got a double top. We broke through that double top, and we're now approaching the top of the channel, and we've made a new all-time high. Remember what I said on the NASDAQ? This is higher than the previous all-time high double top, all right? Very important, but we're still short. Remember what I said on the NASDAQ, that we could rally higher and yet still remain bearish, poking through that recent all-time high and also a double top. We also have a double top on the Dow. So 3 double tops, 3 indices. We could rally above that double top, and then move down. I pointed that out earlier to you, just like we've done on the German 30, and that's already occurred. Now we're short on the German 30, and the targets on this are much lower. I'll show you quickly in a moment, but I just want to zoom into this. Targets for all of these, folks. My mindset right now is a bear market. So I expect these moves to reach the previous lows that we got after Liberation Day and move lower below that in time to come. Same with the German 30, but my target on the German 30 is much easier because we got this channel, and I'll probably be looking to take profit off or exit the trade at the bottom of the channel, considering that this channel has been so well respected, more so than the 200 period moving average, which is here. We didn't respect that on this big move, German 30, but we respected the channel. Didn't close beneath the channel bottom. We have not yet closed above the channel top. Look at these two candles the last couple of days. Yesterday was a hanging man, tiny, small body, doji candle, following a big bullish candle on the day before. There's our short position. So we're just about at it right now, top of that red arrow down. So target for that is the bottom of the channel. Target for these other two, we'll see as and when we get there. Obviously, the recent all-time Liberation Day low, I'm using that term glibly and with some irony, the Liberation Day low. But I think we could get below that. We have only one other position. I'm looking to get into some of these other trades. I don't know which way I'm going to be following the indices, see which way we're going, bullish, bearish. If we're starting to look bullish, I'll be looking to buy MSTR, Tesla, Coinbase, Target, Google. We're already long. Let me show you my one position that I have open on a name. That's Google. Long from there at around, let's have a look at the price, 160, and we're at 164 now. So not all that exciting really, but we have a position on that, quite a small position. Let's go across to Bitcoin and crypto. Now, Bitcoin had a fantastic couple of days moving up. I was worried about this hanging man above the channel top here, the trend line top. Worried about that. It's a reversal candle, but we had gone long at the bottom there. We bought it at the bottom there yesterday, the day before yesterday. If you remember about this, I said the moment we get down there, I posted actually the moment I took the trade that we got long at the bottom there at 102. All of these green arrows, all of these green arrows are positions that I have open, and they're still open. I've taken no profit on Bitcoin. I've taken no trades off, not recently anyway. Obviously, when we got up to these levels, we took some profit off. We dipped down below OMAV, but one or two of my smaller trades got stopped out, but it didn't last long. We started adding on the bottom here. As soon as there was signs of us turning around, other signs that encouraged me to purchase here, we started buying aggressively, and then less aggressively. I'm buying on rallies, not on dips, except for this one. I bought on this dip 2 days ago. We dipped down to there. I bought there. And my next tranche to add on to Bitcoin is at $100,000, 100,200, $100,200. Okay, I'll be adding one more piece of long Bitcoin to that, and I'm going to be adding all the way up to my target, which is around about 140 to 150,000. But I think actually now I'm starting to think this year we may even get to 2x on Bitcoin. That could take us to 200,000. I'm not counting on it. I'm not claiming it. I'm not betting on it. I'm not FOMOing. I'm not hodling. I'm not doing any of loading the boat, any of that stuff. All of our positions are carefully calculated in profit, not large, not huge, but collectively and added up, we have a very, very good, decent chunk of Bitcoin on now. And just doing it bit by bit, adding on rallies rather than on dips. And that's a good lesson for folks who don't often do that or never do that. You don't have to add on dips. Buy when the price goes against you. You don't have to be adding at that point only. Sometimes it's a good idea to do so, not always, quite often not. But you can also add on rallies or wait for the rally and then buy on the pullback like we did on this occasion. We got the rally, I bought the dip, and we carried on moving up. But that's because I've got loads of profitable positions on already. So what happens at the top here becomes less important. My trade profit is being carried, the weight of it, by these much lower positions, but I'm adding the higher ones on. Being careful not to get top heavy and overload the boat on the top side, because if the market suddenly comes crashing down, we don't want all that weight at the top. We want those top trades to be light, fluffy, flexible, easy to get in and out of, but we want that bulk of that trade, the early entry positions, to remain solid. And I'm hoping that we won't get any dips back down to that level anytime soon. So that's where we are. We've got a long position on Ethereum, nice double bottom spike lows a couple of days ago. We're long on XRP. Surprising, this one's lagging a bit actually, but it's not doing too badly. It's just not very exciting. But basically what we've got is this big sort of long-term bull flag with a lot of volatility around the top of it. But anyway, we have 2 tranches on here, maybe 3 actually, one from there, one from there, one from there, and looking for this to bounce off these moving averages and the order blocks. Plenty of support, the 20, 100, 50, and 200, and 2 big order blocks, all just underneath where the price is right now. So I might be looking to add some more to that too. We'll see how we go over the next day or two. We want to finish off this week strong with Bitcoin and Ethereum and XRP. We don't want a reversal candle. We don't want a spike high, a wick doji candle. We want this to move in our favor. Now, we're also short on gold, but long on silver, and we were long on platinum. And I've already taken profit on platinum actually, but we set our profit target exactly where we are now, 1025, and I got at 1023 last night. So I didn't get to the 1025, but we're there now, just about, maybe not quite actually, 102490, 94. So that's my exit point right now, right here. So if you're in that long platinum trade, which I called on X and on my private group yesterday, actually. Yeah, yesterday. That just pure luck once again. I don't know why it moved up so dramatically yesterday. We had a big move up in various things, but it's not platinum. Did I say platinum? I meant palladium. Big move up in palladium yesterday, huge move, and another little nudge up today, just up to the top of that range. We've now exited for a profit. We took out all of our profit on there. So that's a great little trade. Not saying that this might not continue. My target for this is actually the yellow order block here, and then the red order block. This is actually not an order block, it's just a horizontal level. And my target is first of all there, the yellow zone, and then the pink zone above that. But maybe we'll get a little bit of a pullback now that we've broken back up to through the 200 period moving average, through this little downward trend line. Let me just draw that in for you quickly. Through that trend line, through the not best trend line, through the 200 period moving average, that's this purple line, and then the move up to the top of the order. We probably need a pullback. That's resistance, that's support, and we're right at resistance. So let's wait for us to get back down to somewhere further closer to support before re-entering that trade, if it looks good at the time of occurrence. We're long on silver and short on gold. My target for silver is $50. This is a hedge against our short gold trade, and we're long with reasonable profit already. Our target is at the top of this range at about $34, 34 and a half, and then up to the next zone, which is $50. That's the 52, I think it was, recent all-time high, but I think we could exceed that as well. At the same time, and it's really not my major play that, it's actually a hedge against the short gold position. My target for gold is $3,000, just a bit above, just a bit below, down towards here. And even with a bit more of a momentum, another fly from the cows, a bit more momentum, we could move down into the next order block, down into the 2.7s, maybe 2.8s, somewhere down here. Okay, so my first target is there. Remember, we're in a bull market, so this is a counter trend trade, and I'm looking for this to move down to support after a fair and decent correction. Gold does this. It moves up for, you know, these big spurts, and then we consolidate for 3 to 6 months, and we have to sort of reset, gather more liquidity. Gangbusters, gold will often retrace. If these stock markets and Bitcoin and everything else starts roaring up, then gold will probably be the laggard again. If interest rates come down, gold might get a bit more of a spurt. And if Powell and Trump come to some sort of, I don't know, way forward with interest rates, and we start to see some cutting, then we could see gold start to pick up again. Until then, I don't think it's going to happen anytime soon. I thought we might have a chance on the last FOMC rates announcement, but we didn't. And I don't think it's going to happen anytime soon. So that means we might see some lag in gold, but some pickup in some of the other instruments in the meantime. So whilst that's happening, waiting for this gold short to play out, I've taken a long on silver just in case I'm completely wrong and metals start roaring up, going crazy. I'm covered with a long silver position, and I'm also now, I've taken a fairly decent chunk of profit on my palladium position, and so that's also covering some of the risk on the short gold. If we do get a chance to get back long on palladium, I'll be looking at that probably around about, and we may have just missed it, but probably around about, I don't know, 986, maybe 990, and at the worst 977, more or less where we got in on the last occasion. We got in on the breakout. We may have to revisit the breakout on another occasion. And I think I've covered all of that. We've talked about currencies. We've talked about stocks. We've talked about metals. We've talked about crypto. We've talked about oil and natural gas. Let's talk about the US 10-year yield. Horrible. I'm going to get out of this position at some point. I don't even want to talk about it. It's not a major big position by any means. It's not anything like a catastrophe, but it's annoying and irritating. And every time I think we might get some rally in the treasuries, we don't. And the bond yields go up, treasuries move down, and we're stuck where we are. And we have to hold on to a position again for another couple of months or whatever it might take. We're also long on the dollar South African rand for some reason, and there's no apparent reason I'm not privy to behind the scenes type of stuff, but the dollar South African rand, this move down means rand strength. In other words, it cost 20 rand to buy $1, and now it only costs 17 rand 90 to buy a dollar. Okay, so the rand has strengthened despite everything that's going on. And if you're following the news about South African refugees, Cyril Ramaphosa is the president, is visiting Donald Trump today. It's going to be fascinating. I think they're going to get hammered by Trump and his admin. So that's another whole thing affecting the rand. And just this whole refugee thing that's going on, and just lack of confidence in South Africa. But yet we've seen the rand strengthen by 10%. So there's something going on that we don't know about, and I suspect it's got to do with minerals, natural gas. We've talked about natural gas here in South Africa. There's a just down the road from me, right where I am currently, there's a massive natural gas processing plant which was used to produce petroleum, which can be switched to produce LNG for export. And there's plenty of it under the seabed right where I am, just miles down the road. And apparently that's on the table with these negotiations regarding tariffs against South Africa and even sanctions against South Africa imposed by the US because of political reasons. So fascinating stuff. That's all playing out today. I can't wait. It's going to be great. Right, let's finish off with commodities. Not a great deal to talk about here. I'm still long on sugar. You can see all my positions. Looking rather miserable. We did get long there originally. That long is no longer actually in play, or that one. But what happened was we got long right at the bottom here. We took profit at the top there. We started buying again on these dips, first to the channel center line, then the second dip to the channel center line, and we're now on the third dip to the channel center line and this yellow order block where we might try to buy some more. This is the sugar Moab, folks. And what this means, hang on, can you hear me? Is it all coming through okay? Don't know why that's not loading up. Anyway, this is the sugar Moab. Down darker yellow line, we might look quite a lot lower on sugar, down to about 17 cents per pound. We're currently trading at almost 18 cents per pound. I'm hoping that we'll bounce off this precise level right now, move up to the channel top, and then break up through there. Well, it's not a channel, it's a trend line. Here's the channel, but there's the trend line. That's where we want to get up through. So that's sugar, still long and still bored and still annoyed. Cocoa, this is a great trade. Once again, this is working out beautifully for us. We got, all right, that one is no longer, yeah, all right. So let me just show you what happened. We got short here. Remember, we were short all the way from the top here. We hedged. We had to hedge a few times. So fairly long and complicated process over a couple of years, this cocoa business. But we did well out of it anyway. And then we started to resell on a retracement back to this clear resistance level. But we broke through there about 2 weeks, 3 weeks later, up to basically the top range here. Now let's look at the broader picture. We're at the top of this range, denoted by the yellow lines, top and bottom. We're at the top now. We're selling there. We also sold there. But before, just in case you think that I'm bag holding that short position, I am bag holding the short position. But what you don't see is, and I've deleted it because that trade is over, the moment we broke up through that level, I put a long hedge on there and hedged the entire position. The moment we broke up through there, I hedged the entire trade and then took that long hedge off at the top. Restaurants filling up, took the long hedge off at the top, took profit on that, and then added a short position right at the top here. And then a couple of days later, we got a spike high doji, beautiful, up to the top of the range perfectly. And this range has been drawn in here for weeks and months and years now, just the top of that range and then back down. This is today moving down nicely. And folks, I'm going to have to clear out of this restaurant because people are coming in for their food. So that's cocoa. Coffee, we're short on coffee. Oops, we don't want that. Short on coffee, not much to say. Broke down through that little trend line, just trying to get back up through it again. We've got a few positions on there looking okay. I like this one. Target down to the bottom, back down to this channel line, the original channel that we broke out of. We have not returned into the channel just yet, but I want to get back down to the top of the channel, channel center line, and then channel bottom, and eventually below the channel. So that's coffee. I'm pretty pleased and happy with that trade. And then corn, we're long. We're long from over there, going back to February. And yeah, boring. Hello. And then cotton, we're long. All our long tranches are here. Some of them in profit, some of them not. I like this very much. We broke out through the top of the channel after creating this consternation, this thrashing around. It's a bit like, you know, when an animal is dying, a fish on the beach or an animal in the bush that has been injured or hurt or shot. There's a lot of thrashing around, a lot of craziness that happens at that moment, and in that transition from life to death, and in the transition from bearish to bullish in markets, you get a very similar phenomenon. It's quite interesting. You can see that these are sort of death throes, the downward channel, and looking fantastic. So we managed to get some longs at the bottom of the channel. We've broken out through the top and holding, and yeah, so that's it really. I'm going to get rid of this Bollinger Band. We don't need this. Make it clearer. Let's get rid of the Bollinger Band. So there we go. Just moving up. Targets are the red line and then the green line. You can pause your video. Let me just read it out to you. $70 and then $74. 70, not dollars. This is cotton, cents. 70 cents, 74 cents, and then those are our positions. So that's that. It's all right. We're not in a rush anymore. People have left the restaurant. Orange juice, we have no positions. We've been short up until now. We've been short all the way down through this process. It's looking a bit messy and choppy now, so not really interested in that right now. And then wheat, we're also long. This had a great spurt the other day, a couple of days ago. Well, yesterday, actually. Well, actually, really for the last few days, 1, 2, 3, 4, maybe a couple of weeks, wheat has been moving up nicely. Maybe eventually we can get through the top of this channel line and start to get some wiggle on moving up, despite everything that's been going on in Ukraine, Russia, and the ports in the Black Sea area, and transporting of wheat and this big wheat growing area. Wheat has remained weak. We haven't reached the bottom of this. It's a falling, descending wedge, folks. It's a bearish wedge. All right, go and Google it if you don't know what a bearish wedge is, a falling wedge. But this is a falling wedge. We have not reached the bottom of the wedge on this last occasion before bouncing up. If we make a higher high here compared to these previous highs and move up beyond them without reaching the bottom of this falling wedge, it's a pretty bullish sign. Of course, that will be capped by a move above this high at 623 and a break and close above the trend line. So I'm happy with wheat. It's looking better for a change. And for those of you and some in my private group are quite avid wheat traders and are pleased with that. And the last one is soya beans. And yeah, we've taken profit on this, so we have no trades. We took profit at the top of the range here. We've been buying the bottoms, taking profit at the tops, and I guess we'll try and do the same again if we get back down to the bottom of the range. But no positions on soya right. And that's it, folks. I'm going to get through some of the questions right now. I'm going to spend 5 minutes, try and go through them pretty quickly because market's opening in a few minutes' time, 11 minutes' time from now. All right, I'm going to just give me a second. I'm scrolling up through here. Just trying to see what I've seen. Good day, Nickel. Nice to see you, mate. Martin, thank you, Matt, very much for your support. You always are so vociferous in your support for this channel and for my work. Appreciate it very much. Marek Servus James, thank you very much, Marek. You're a good-looking man and couple over there. Lovely to see you. Picture, lovely picture. Maine from Germany. Moin. Ole M. Okay, lovely, great to have you, Ole M. Ivan Zotov, what do you think of natural gas move up? It's faster than move down. Yeah, just a short squeeze, Ivan. On natural gas, we had this move down. Don't worry about it too much. Don't read anything into it. There's too much reading of tea leaves going on in these markets, and people trying to figure out why things happen. Go and look at my tweet, my last tweet on X, and explaining to you why we should not try and understand the markets too much. This beautiful, very steep, very straight, very uninterrupted trend line is always setting up for a short squeeze. The longer something carries on in basically a straight line without changing direction, without retracements, without pullbacks, like we see on the left-hand side here, lots of zigzagging, nothing here, just straight down, and that's just a short squeeze back up to the moving averages, resistance, and the order block. Nothing more, nothing less. I'm sure there are all sorts of reasons for it if you want to find them in the fundamentals and the weather and supply and tornadoes and LNG and Canada and all the stuff that we look at on a daily basis. You can find a reason for that move anywhere you want. The point is we moved down without interruption, and the market got tired of moving down and had to squeeze out some of those shorts. So it's nothing really very complicated. And like I said, I'm sure you can find all the reasons for it if you dig deep enough, and there will be reasons, but the charts show you what's going on. Good day, Blue Gel. Fantastic. Oh, it's a pleasure, Martin. And Martin says, thanks for making this live stream under difficult circumstances. It's freezing cold here. You can see I had to go to the shop and buy a American baseball jacket, LA Lakers or something like that. And it's very, very cold here at the moment. Winter has definitely arrived, and it is tricky because I'm sitting in the public space. But sometimes you've got to get away, and it's part of trading. You can't just sit at home in your office being miserable, frustrated, stressed, and depressed all the time. I don't feel like that most of the time, and it's not really me. But if that is you and you're stressed by your trading, lots of people get stressed by trading, it's good to get away. Good day, Emily. Emily Trading, wonderful to see you. I know Emily pretty well because Emily's one of our staff. In fact, a senior staff here at ArcisFX. Life's great, Euro and Dixie. Okay, we've talked about that already, so I'm not going to repeat it. You could, if you didn't make it on time, go back and check the video. It will be uploaded and available for rewatching later on. Good day, Trinity, the Trinity Effect. Good day, Carlos Tellier. And Louis, and let's see. Would you expect the euro to drop beyond 1.106 before we move? I don't know. Life's great. No idea, mate. I'm hoping not, but it might do. I don't know. Good day, Daniel. Okay. NG making big moves overnight. West Coast, bloody unfair. Yeah, so time zones play a difference. Yeah, so it makes a difference where you live as well. Luckily, I'm in the European time zone, and I can cover all of the markets, except for the Asian market, which is the one I don't want to cover much, because it's the slowest and the most and the least interesting, really. So one wants to be trading the European. I'm looking at the wrong camera again. It's a bit like being on TV. Camera A, camera one's over there, camera two's over here, camera three over there. Today I've only got one camera, and I keep on looking at camera two. Yeah, so it's difficult if you're trading a weird time zone. I trade in European time zone, so I can cover the entire European time zone and most of the US time zone before 10 o'clock p.m., 10 p.m. my time at night. Good day, Fariba Bahrami. Hello from the UK. What's your take on the FTSE? I don't trade the FTSE, Fariba. I'm sorry, mate, but I just don't trade it. Just don't trade it. And I'm not, I don't want to waste your time by telling you what I think about the FTSE, because I don't trade it enough to know its nature, its character, what's going on, just the whole what's going on in the news, what's going on in the UK. I don't follow it as acutely as I follow US markets. So any advice I gave you would be pretty shitty. Thanks very much for your time, James. Excellent presentation. Thank you, Robert. I appreciate it, mate. Thanks for your time, rather. Good day, Michael Savage from Australia. Always appreciate your time and your simplicity. Thank you, Michael. And good day to you in Australia. Greetings from my area of the Sunshine Coast. RK, thank you for that tweet. I won't be analyzing hundreds of bits of data. Same post, trying to look for an edge. All right, mate. Yeah. So I try to put up very simple tweets on X, folks. I just put up what I think as clear as I can, just a chart and one or two words or maybe a sentence, just to show you what I'm thinking. I'll try to be very specific, very clear, tell you exactly what position I'm getting into. I don't bullshit. I give you the trade price, the entry. I leave the arrows on my chart so you can see where I got in. You can see where I got out. You can see where I hedged. I put that all up. It's completely visible, and I do it in advance as I take the trade at the time of the trade. So you can look at that with confidence and see what I've done and what I've proclaimed to the public and claimed as my trades. But they are my trades. My private group guys are all watching me. It's, you know, it's not possible for me to put a fake trade up on X. As my private group would be all over me and tell me I'm being dishonest, which of course I wouldn't do. Carlos, pleasure, mate. Lovely to have you here too. Hello. Hi. Long sugar and corn, short coffee and cocoa. Fantastic. Yeah, same as me. That's great, Samsung. Samsung S sounds like Recky. Okay, folks, I'll see you in the next stream. I'll be doing a video tomorrow and probably a live stream the very next day. So if you've not subscribed, subscribe to the channel and press the like button. And if you'd like to get even more inside info and members perks, there's a join button. And you can join there. In fact, I would give some free memberships away, but I've given all of them away for this month. YouTube has a restriction on it. Folks, the market opens in 4 minutes time. Have a good one. Good luck. Hope you got some use from what I've just showed you. And those are my ideas. I'm not giving you trading advice. That's what I'm doing. And if you think I'm an idiot and that I'm wrong, you should not do what I'm doing. If you think I might be right, you might confirm some of your own ideas and might add to some of the decisions or the veracity of the decisions that you make yourself. But don't rely on me. Don't rely on anyone from YouTube. Most of them are just junk. And I'm in danger of being just junk as well, because what I say doesn't always apply to you. My account's different. My strategies are different. My account size is different. My goals are different. My financial status is different to yours. So whatever I say has got to do with me and me alone. Try and use the information to improve your trading, your financial, going how you fund your account and all that sort of thing, and how you, whatever you're doing, investing. Only if it confirms what you think yourself. Do the research. Find out for yourself whether you think the euro is going up, whether you think gold's going down, whether you think Bitcoin could reach 150, whether you think gold, oil will get back up to 70 or 75 before moving down, whether you think natural gas will get up to where it has done now, formed a reversal candle and will move down to below $3. Whether you think silver as a hedge against the gold short, a silver long and a palladium long is a good idea. All that sort of thing. Don't rely on what I'm saying. Don't rely on what anyone else is saying. Don't believe a word anyone says on YouTube or on Twitter. Work it out for yourself. And if you trust someone, and I hope that you will in time develop some trust in what I'm telling you, it's the best that I know, best that I can offer you. And I've been doing this for almost 30 years now. And it's the best advice I know, but it's not perfect. And it's not always right. And it's definitely not exactly right for your situation. Have a good one. See you in the next video. Thanks for being here. I've got to go.